So the Tesla bubble is finally popping, and why I think it will keep deflating. A few months ago, I made this abhorrent, offensive video about Tesla entitled Tesla is the most horrifying bubble of all time, and I contend that it still, even at current valuations, remains the sickest bubble of all time. And I may regret this in a few weeks, we'll see, but we're gonna do it anyway. So here we go. The Tesla bull's wall of not actually listening to Stockaholics' actual analysis, probably not watching the video they clicked on, typing an ignorant comment, ignoring valuations entirely while following the herd mindlessly, going full-blown FOMO, and then talking shit when someone tries to critique the price of the stock and not the success of the underlying company, while probably repeating some CNBC analyst's words of their drunk Uncle Jerry without actually thinking about their investments in any meaningful way.
Bubbles are fun for everyone. Bubbles are fun. Bubbles are fun. Bubbles are fun for everyone. Blow them in the air. Blow them everywhere. Blow them in the air. Watch them pop or fly away. Bubbles are fun. Bubbles are fun.
Bubbles are fun for everyone.
Bubbles are fun.
Okay, so many of you guys may have seen this before. This is kind of just like the classic representation of a bubble. And there's all these different phases and how they tend to be categorized. And they're not all the same. And I wouldn't argue that the Tesla bubble, which I firmly believe is one, actually represents all of these things in here. But I think what many of you may see in a second when I share this with you is that it very much resembles this kind of a pattern. There's those four phases where we have the stealth phase, awareness phase, mania phase, which I believe began at the low around here during the COVID sell-off in March last year. And there's finally the blow-off phase, which I believe we are starting to enter. Now, there's some emotions that the average investor tend to have, or there's kind of these, if you frequent forums, you listen to your neighbors, you listen to the mainstream media on these kinds of emotions, and they match kind of these patterns in, and this is kind of not an exact science, this is more of an art here, what we're talking about, yeah. And they match different phases, right? So in the middle of last year, you might say that, well, the interest in Tesla was enthusiastic. At some point, it reached greed and delusion. And then now I think we're probably starting to enter this phase, which is fear. All right, and you'll notice that if you kind of compare this to the classic bubble chart, it has a striking similarity to it, if not an absolute similarity to it. So we'll start. This was the March and April of last year. There was already looking to be some interest in here before it sold off with the panic in the March and April COVID situation spreading around the world. But things turned around, and that quickly turned into some growth. So in the share price, not the company particularly, but the share price. And there was starting to get some media attention, you know, like if you look at the Squawk or whatever, you look at, what's his name, Jim Cramer and CNBC and all of these kinds of mainstream outlets, they were starting to get really interested in this company. They were paying attention to it. Then all of a sudden you started to see more and more of these YouTube channels talking about Tesla. There's one channel, I think, and I don't talk shit about any YouTube channels because plenty of people could talk shit about me, but one channel I noticed that became very popular, it started blowing up during this time. I think his name is the Tesla Economist. So there was actual YouTube channels fully dedicated to talking about Tesla. It kind of ramped up even more, and during this time, I believe you'll notice that it levels out. And I'm going to talk a little bit more about this in a second, but this actually coincides a little bit with those extended unemployment benefits starting to end. Okay. But for whatever reason, I don't remember what happened over here. I'm sure there was a catalyst for this greed phase. Maybe it was some announcements. I don't know, maybe it was Kathy Woods. Who knows? I can't remember. Then this greed phase kicked in. And this is where I started talking about Tesla somewhere around here. Well, I only made one video, but I made my last video somewhere in November of last year. And it continued to skyrocket. So if you had bought despite that video and happened to sell over here, you could have still made a little bit of money. But that was not my intent to make that video to, be able to make a trade on Tesla, right? It's from a long-term thesis investment perspective. Now, what's interesting is around this time, what inspired me to make this video, there was a friend of mine. And he had, somewhere down here been talking about Tesla. He's like, man, should I buy Tesla? And he was asking my opinion on this. And I was like, no, dude, it's clearly a bubble at this point, right? You're buying just because other people are buying, you're buying into the hype. And somewhere around here, he got mad at me because I had told him that. He was like, why did you tell me to not buy? I could have made so much money. And I was like, you don't get it, man. It's not about, buying just because the price can go up. Sure, it could. You could have bought all kinds of things and the price go up. It's about a risk to reward ratio. And, what's funny is he got heavily involved in all of this trading mania that also took place. And, what's funny? Well, I don't talk to him much anymore. He got a little mad and we haven't spoken much anymore. And he's gone broke since, which I believe is no coincidence, right? Okay. But of course, we reached a point where it peaks out. And now it reached the point where denial, there was this kind of return to normal phase. And now I believe we are firmly entrenched in the fear phase. Okay, to kind of emphasize how I see what's happening with the Tesla stock and what's happening and why it's likely to continue to go down in the near medium-ish term. I wanted to talk about stimulus checks. So who are the people who have been most ecstatic about this company? They tend to be retail investors. They tend to be people who don't think much about valuations. They tend to be people who are just excited about the future and that don't have the most experience in investing, right? What's taken place in 2020, we've seen a record amount of retail investors, first-time investors opening accounts, especially during the times in the last year when there were shutdowns in the economy and there wasn't much to do. People were stuck at home. But if you look at a chart and you kind of compare it to where stimulus checks were given to the average American, they kind of coincide to some degree on when you see uptrends in the share price of Tesla, right? First stimulus check was April of last year, early April, and you notice that the stock continued after that. You'll also notice that it reached a certain point and began to peter out. Now, it's also important to take note that during this time, after this first surge in the lockdowns, a lot of people in the United States were receiving extended unemployment benefits or additional unemployment benefits. So they were receiving $600 on top of their unemployment benefits. So they lost their job. They're stuck at home. They're not doing much. They're interested in investing because they don't have much to do. And on top of that, a lot of these people had higher than average incomes. At the same time, they had lower than average expenses. There were mortgage and rent moratoriums. And I think that this area coincides with that $600 unemployment benefit ending, as well as that original unemployment surge. Now, if you look at this second stimulus check, it was around here. And then there was another big surge in the price. And after there was a big sell-off in Tesla where it started to look like it was starting to peter out, there was another stimulus check. And I would imagine that many of these people who were thinking about or had already bought Tesla before used some of that money to buy the dip. Okay, normally I don't talk much about technical analysis. Personally, I don't believe much in it. It's how I see it is more of a self-fulfilling prophecy, in that if enough people do believe in it, it becomes true. And the reason I'm going to be talking about it for Tesla is because I firmly believe that the majority of interest in this company tends to be retail investors, right? And the people who tend most to believe in technical analysis tend to heavily skew towards retail investors, right? So if we think about it from a self-fulfilling prophecy perspective, in that if enough people believe it, it becomes true, and the people who believe it tend to be retail investors, then technical analysis for a company like Tesla is likely to hold water. It's likely to actually be true. Okay, so I know not the most. I know a little bit about technical analysis, but there is a few things that are alarming, and this will become very interesting in the next few days to watch on how this turns around. Now, this green line here, I believe, is the 50-day daily moving average, the 100 DMA, and the 200 DMA. Now, I believe today we crossed the 200 daily moving average. So what this means is that if you are still long-term bullish on Tesla, I believe that this is a critical juncture, that for this uptrend to be maintained, because so many people who own Tesla likely believe in technical analysis, that this point needs to hold. If it doesn't, I would say that that fear phase is going to become extreme fear phase, right? Yeah, so we'll see in the next couple of days. Oh, and one thing I want to mention too, way down here, you can notice at about $80 is the mean of the stock price over the Tesla company's lifetime. Now, for me, I actually like Tesla. I like it on a fundamental basis and from a reasonable, valuation perspective. If Tesla crossed below that mean, that is when I would start to get interested in it. And you can see, we're still quite a ways away from that. Now, I wanted to share this, that not every bubble is that follows that clear pattern that we saw before. So one of the ways that I wanted to show this is through a company called Aurora Cannabis. In the early about 2018, there was a tremendous interest in marijuana stocks. I believe because there was a lot of legalization happening around the different places. But you can notice around this time that the stock over here does resemble somewhat of that pattern that we were talking about, right? But you also notice that it surged up and it had this weird pattern that is very difficult to explain and that's not every bubble is the same. They don't all, could very well be that Tesla does something like this, skyrockets, and by the way, a man like Elon Musk, he is very influential, he's very interesting. Many people would argue he's a savant, and because he does so many cool things like SpaceX, and he has been around so long, I wouldn't be surprised if something like this does happen. But inevitably, the price in Tesla will reach a fair valuation. It will reach a price to earnings ratio that is accommodative, perhaps at a slight premium, but is accommodative of the actual representation of the company. And we are still nowhere near that. Okay, so besides just some charts that represent a bubble or look similar to a bubble, why would I think that the Tesla bubble is likely to be ending? Just because it looks like a chart doesn't mean that, it couldn't just go up from here, right? So I wanted to try and think about this in terms of 3 questions, right? Okay, and these are those questions. Who is most, or who has been most excited about Tesla? Who is most susceptible to emotional investing? And the third, which I think is probably the most important of these 3, is who's about to not have any money. So let's think about this first question. Who has been most excited about Tesla? Now, if you look over the past year, you look at the explosion in interest. If you go to like Google Trends, for example, you'll notice that during those surges, there's been a tremendous amount of searches. And a lot of these people have been retail investors, right? And if you also think about different funds that have been extremely popular, like ARK, for example. They've also been tremendously bullish on Tesla. Now, if you also think about those retail investors who might be investing in Tesla, might also be investing in ARK, there's kind of some spillover there as well, right? So that retail segment is getting involved in different ways, right? Now, the second is to think about who is most susceptible to emotional investing. That tends to be inexperienced investors in the stock market. And like we've seen over the last year, there's just been a tremendous explosion in millennials, in getting first-time investors, right? And what are the things that these kind of people have in their frame of mind? A lot of the things that they notice around them is like a green energy future, and many of which believe in that narrative, right? So we think about it in terms of these first-time investors who have been extremely excited on the way up. What is likely to happen to these people who are inexperienced, who haven't experienced a bear market, if you will? What are they going to do when stocks don't only go up, right? When they start to get into they experience that fear phase for the first time, right? Now, the third thing, right? And I think, by the way, this is probably the most important, is to think about who's about to not have any money. For the past year, the people who have been laid off and unemployed, which, by the way, has just been astronomical numbers over the past year in terms of unemployment, many of which have been receiving unemployment benefits, a lot of which have, for a lot of last year, received those additional $600 on top of those unemployment benefits, and now many of which who are still receiving unemployment benefits, receiving $300 additional dollars. Now, the narrative has kind of changed, right? A year ago, there was a cerveza sickness to be worried about. If somebody was at home and they weren't working, and that wasn't generally seen as a bad thing. That was kind of like stop the spread, right? Now the majority of the population is vaccinated, at least in the United States. So it kind of begs the question, especially the at-risk people are vaccinated. It kind of begs the question, why are we still paying, and this is becoming more prevalent, this idea, why are we still paying for Tom to be sitting on his couch playing video games when he could go back to work? And you're starting to see this in this jobs report, where there was a big miss on expected additional jobs to the economy. A lot of people are starting to realize that these unemployment benefits are competing with the labor force. The government is essentially competing with the economy, right? It's becoming restrictive to people going back to work. And what you're going to start to see is that not only are there way fewer jobs than there were a year ago, but these unemployment benefits are going to start to end. Now, a lot of people are concerned about inflation and things like that. And there's not enough workers. There's a worker shortage. You'll see very soon how quickly things can change when these unemployment benefits come to an end. And additionally, right, when rent and mortgage moratorium comes to an end, when you suddenly have to pay your rent and your income per month goes down significantly because you have an additional expense, or if your mortgage is starting to come due and you've been procrastinating on that for a year, and you're thinking about, maybe I do actually need cash. Maybe, cash isn't trash. Maybe this hype, I got to pay my bills somehow. What might I need to do? Oh, I was invested in this Tesla stock. Maybe I should sell that to start paying my bills. And you'll see, when you have 20% additional income for a year from retail investors and 30% less expenses from retail investors for a year, I think you can very firmly explain what has happened. And when that starts to change, and when people need that money, what is that going to do? What is it going to do when people are also fearful and they don't have money? So, and this is kind of boils down to this final point, right? It's like, people have been saying for the last year, valuations don't matter. And there's that common saying that it's like, yeah, no, they don't. until they do, right? So I would like you guys, what do you guys think about this? Am I wrong? Am I on the wrong side of this trade? And by the way, I'm not involved in any way. Let me know in the comments. And if you hated this, ooh, I would love to get that thumbs down. No. Well, I'm sure it's gonna happen anyway. Anyway, hope you guys have a good weekend.